Hi, I'm Chad NeSmith, Portfolio Manager at Tobias Financial Advisors, here with your monthly market update. The S&P 500 is up about 5.5%. That's after going through about a 4% pullback that started in April. The market is a little bit spooked. We were up at about 10% to close the first quarter, but it's gotten spooked a little bit by inflationary data that's come into the market over the last 3 months. Going back to 2022, we had been going from 9% inflation steadily down to about 3.2%. But recently it's picked back up to about 3.5% year over year, and that's happened in the most recent 3 months. This has caused the Federal Reserve to hold back on rate cuts. Originally this year, the market was expecting 6 rate cuts. Then they were expecting 3 rate cuts. But now the most recent data is we're expecting 1 rate cut and maybe 2 rate cuts towards the end of the year. And this is causing interest rates to rise along the longer end of the curve, and it's causing investors to be spooked a little bit. So we're having a little bit of pullback in the market. In the next slide, I'm going to talk about the pullback and volatility and what it means for your portfolio. What you're looking at is an intra-year decline versus the calendar year return for the S&P 500. So far this year, the market is up about 5%, and you see that reflected on the right side of the chart here. And we're going through currently about a 5% pullback in the market. And the market seems a little bit spooked, but it's only a 5% pullback. It's really not that much. Last year, we experienced a bull market of 24%. But during that time, we experienced a 10% pullback in the market for one of the peaks. And going back to 1980, you can see that things can get a lot uglier than 5%. We've seen 25, 34, even back to 2008, it was 49% from peak to trough in that year. So while we've gotten some a little bit spooky data, the market can get a lot more volatile as the year goes on. And that's really important to keep your overall risk profile in line with your long-term financial goals, and to not get too greedy when overreaching in your investment returns. Thank you so much for listening, and we'll see you next time.